Today we're going to talk about boring price action. Is it really that boring, or are there opportunities? Let's find out. Hello there everyone, I hope you're having a beautiful day. Today we're going to be looking at the boring days in the crypto market. So we've all noticed this, right? Whenever we see some action in the market, everyone seems to be hyped and pumped and thrilled. And then there are periods like so, as what we're experiencing right now, where there's just not a lot happening in the markets. Well, is this really a time where you don't have any opportunities? I don't think so. So these ranges that we're trading or that we are seeing on Bitcoin, they can provide you an amazing opportunity. So I want to give you guys a simple perspective to start out this video. And that is, I am going to measure the distance from this high to this low over here. Okay, let's make it a little bit easier to understand. And let's say there's a 50% correction over here, right? All right. So let's say this is your portfolio and you bought in at the highs, and over here, when we're at 34,000, is a minus 50% correction. Okay, so what happens if we go back up? You will see that you need 100% gain in order to reclaim a lost 50%. So the further down you will go, the more problematic this becomes. So when we're at 60% over here and we go back up, then it's already 152. If you go 70 or 80%, then it starts to get into like the 400, 500% territory, and it becomes very difficult to get back your gains. Now, why is this important? And why do I talk about it in this video? Well, if you are just hodling, right? And you buy over here, or this is your portfolio over here, and now you're hodling until this moment over here. Let's say there's a 42.5% correction on your portfolio when you are just hodling, if your altcoins perfectly follow Bitcoin, which they probably won't. That is not a situation that you want to be in with your portfolio, because in order to make up for that 40% loss over here, you will need to get back a 65% gain approximately, or let's see if we can measure it up correctly. 75% gains approximately. So what I like to do is I like to use these ranging periods, this consolidation. I like to use them in order to grow my hold positions. So there's a certain percentage of my portfolio that will always be with hold positions. But when I make good use of these opportunities of sideways price action, I can trade these ranges. So whenever a dip towards the downside starts to happen, a range starts to form. This will always happen. Dip towards the downside, range starts to form. Dip towards the downside, range starts to form. So if I can trade in a sideways moving market and then we go back up again, so let's say we go down, and instead of being still in my positions, I now trade these ranges. Now, if I trade these ranges, I can now decrease the chances of me getting in a very big drawdown. So let's say instead of getting an 80% drawdown, I now get a 50% drawdown on my whole portfolio because I was trading these ranges. Now, if in a complete bear market, we go 80 to 90% down, and I managed to get that down to 50% drawdown, now I only need 100% instead of 500% in order to get back to my old portfolio highs. So I am at a head start against every other long-term hodler that has not been trading these corrections. And that is the perspective I want to share with you guys. Now, how do we trade these corrections? It's very simple. You have a low being created and you have a high being created. Now, you will start to go and move in between the low and the high, or at least that's the most likely to happen, right? You create a low, you create a high, maybe you have a range deviation above the low or above the high, but approximately you will be starting to trade within this box until you break towards the downside or towards the upside. So what I like to do is I like to use the VPVR, or the fixed range volume profile. which you can find over here, fixed range volume profile, FRVP for short. And then you have the point of control, you have the value area high over here. And if I can make that an extra confluence, for example, that we had over here, if I go pull this towards the downside, then we see that we have a 0.618 from this move, this high until this low, 0.618. We saw this low being created. We saw a perfect rejection in the 0.618, beautiful selling opportunity. And now we get back to the point of control. Now, if we get back to the point of control, let me just get this a little bit back towards what we had over here. So before we had this price action, right? Before we had this rejection over here and then this move, the point of control was over here. You see this red line? This is called the point of control. We moved from this high to the point of control, and then we started to test the value area high again. So what I could do is I can sell these highs over here when I see that we are in a beautiful shorting opportunity, and I will just scale out with around 20-25% of my long-term hold position in a specific coin. Then I go back towards the point of control, and then I buy back that position. Now I have made 6% or a multiple of 6%, depending on which altcoin you trade. So instead of holding and just hoping that the market goes up, I am now actively managing a part of my long-term holds. And by doing so, I increase my overall amount of coins. I cannot be perfect with this, but I will increase my amount of coins. And then when we start to go up again, that's when the magic starts to happen, right? Because by increasing my hold positions over here, when we start to get back to my old all-time high value, right, 69,000, let's say that there's my all-time high of my portfolio, I now have more than what I started with. So I like to get good at trading the range. Now, what I do is I give you guys daily updates on the levels that I'm looking at in order to trade ranges like this. So if you're interested in that kind of information, then do subscribe to this channel because it will help you tremendously in being more accurate when trading these ranges. So for now, I am looking at this level over here, 41,725. There's an important low over here, and there's the golden pocket over here. And I do believe that these two levels will provide the needed liquidity in order to get back until the highs of the range, or at least make a considerable pullback. So that is the level that I'm watching. If we start to break below that level, I'll be watching this low over here and seeing if we can make a rejection over here at 41,200. So these are the two levels that I'll be watching, and I'll be managing my altcoin portfolio accordingly. This is my strategy for right now. We just broke out of this structure. We are still in some sort of a parallel channel. It is starting to look a little bit like a falling wedge if you look at it like this, but this is, in my opinion, just a new parallel channel being formed. And I like to see a dip towards the downside, beautiful buying opportunity, and then see if we can make more upside. All right, that's my strategy for this week. I hope you guys enjoyed this video. If you did enjoy this video, don't forget to subscribe to this channel in order to get more content like this. Comment what you think your best strategy is for trading the range, and do let me know what you think about this video. All right, everyone, thank you all for watching, and I will see you in the next one. Bye-bye.